Great. You guys ready?
Yeah, it's hidden now, so I'm gonna mute myself, and you can open up the room whenever you're ready, David.
Thanks, guys. All right.
Take it easy. Have a good show.
Thank you. Okay, folks, welcome. Welcome to the Art of TradeStation. I'm David Russell, VP of Market Intelligence here at TradeStation. It's great to be with everyone. Before we get started, let me read some disclosures. Today, we're going to be talking about some of the tools and techniques for going back and keeping track of all the IPOs and SPACs that came to market last year. So first, the following presentation is for educational purposes only. All symbols and trading ideas discussed by the instructors are for demonstrational purposes only and are not recommendations. This presentation is not an offer or solicitation of any kind in any jurisdiction where any TradeStation affiliate is not authorized to do business, including but not limited to Hong Kong and Japan. Active trading is not suitable for everyone. Options and futures trading carries a high degree of risk and is not suitable for all traders. Please read the disclosure information handout or the electronic disclosure information available on the TradeStation website. Okay, great. So as we get started now, I wanted to first of all share with you guys a zip file. If you want to go to the zip file, first you want to open up the chat in Zoom. That's how we're going to ask questions and everything else. So if you go into your chat, you're going to see I just shared a link, if you go into that zip file, you're going to see this. You're going to see 3 items. This first one is a PDF. It is the slides I'm going to be sharing with you guys. And then there's also this ELD, which includes a series of indicators. Now, you're going to want to double click on that, and it's going to try to import. You have to have TradeStation open, and it will import a series of indicators. I already have them, so I'm just going to skip it. But you can import them, and then once that's done, then you can open the workspace, which is this one here, the Art of TradeStation workspace. So that's how we want to go through that. So what I want to just do is just very quickly recap the record year for IPOs, showing you ways to find IPOs with Scanner, then doing some advanced alerting, and I'm going to kind of show you some things you can do with easy language as well, and some of the customization that we're able to do. Now, before we go much further, I want to just very quickly just tell you a little bit about some of the other things I do here at TradeStation, because I run the blog on the TradeStation website. So if you go to TradeStation.com and you click on Insights, this is a Market Insights blog. And now there's a few things I wanted to just kind of point out recently, because they did really jump out to me. First, we had done an article back on December 15th, kind of showing how there was this dramatic selling pressure in the high multiple growth stocks. And I thought it was just interesting because we did this back on the 15th of December, and just like an hour ago, CNBC put out an article. It was actually earlier today, but it was based on a Goldman Sachs note that was basically saying that institutional investors or hedge funds had the biggest selling of tech stocks on record right around the time of New Year's. So this is exactly the sort of thing that we try and stay on top of with Market Insights. If you go to Market Insights, you can sign up for the newsletter. A lot of things we do like this, we kind of look across the market, and everything I do is based on the functionality of the TradeStation platform. It's really a great thing that we're able to kind of dig into and find so many different trends in the market based on that. So that's one thing that I did want to highlight. Another thing that's interesting is over time, I have done some articles that essentially show 7 catalysts that I kind of view as the underlying reasons to explain why stocks go up and down in the market. And one of those 7 catalysts is the idea of investor rotation. And it's somewhere in this article. I put this out over Christmas. You don't want to see it. It was back on the 21st. But investor rotation is interesting because that's exactly what that CNBC article with Goldman Sachs is talking about. We have seen a kind of activity right now in technology for years. And, at a certain point in time, investors rotate away from things. And, there's a good chance, really since 2016, technology and the NASDAQ have been completely dominant. And if there's a time for that to potentially end, it would be a period like this with the Fed being so aggressive. Now, I think it's important to realize that at this point in time, this Fed narrative is an increasingly important area. And when I look out at some of the IPOs and stuff that we're going to cover, a lot of them have really struggled, and the backdrop for them in the coming months is probably not terrific. So I wanted to just kind of say that, because a lot of what we're looking to do is to stay on top of all of these when the opportunities do arise, because in many ways, when the Fed gets through this cycle, that could be the time when people start looking and they come back to some of these IPOs at this point in time. But I did want to emphasize one or two other things. First of all, is the fact that next week we have Jerome Powell in Congress on Tuesday. Then we have CPI and PPI. So there's going to be a lot of sense of inflation. This sort of like the Fed being hawkish, coming out. We did a big article kind of highlighting it today, and there's going to be more of it next week. So I want to just emphasize that when you look at that. I think the other thing that's important to realize is that the Fed, if they want to normalize policy at a time of a strong economy like this, 800,000 jobs added from ADP, if you look at that report yesterday, the strong economy we have right now, if there's a time that they can kind of beat up the market, this is it. And I think a lot of people haven't really, they're just starting to price that in now. So as I put all that stuff together, I wanted to just kind of give you a preview of something I'm going to be publishing tomorrow on TradingView. Now, there's a special indicator I created. And what this does is this looks at the S&P 500, and it looks at how long since the S&P tested its 200-day moving average. This is a very long run of almost 400 candles, which over the long run is a very long run. Most of the time it doesn't go more than about 400 candles without testing. So we're getting up to that point when a lot of the pieces are coming together. We're in a new year, money shifting away from big tech, and the Fed getting hawkish. And we've gone a long time without testing the 200-day moving average, which would be, back under 4,400. So one, just kind of put all those things together and just kind of, show you some of the things that might be kind of interesting here to look at. All right. So now as we return to, the IPO material I wanted to discuss, it was a record year for IPO volume. We basically had volume up about 67% from the previous year. According to EY, which is Ernst & Young, the SPAC volume was absolutely through the roof above 2020. That was also a record year. So it was a huge year of supply, and I think we all know that. But the thing is that the performance was quite bad. When you look at them overall, the IPO ETF that tracks companies in their first 12 months as public companies was down 10% on the calendar year versus the S&P up 27%. Most of the companies went below their offer prices, and there were all kinds of big disappointments like Oatly and DD, Robinhood, a lot of others. So some of the big names as we kind of look at these were, a name like Rivian was one of the biggest. Now what's interesting about this is if you look from its IPO price, it was up 33%, but a lot of these companies really did not do well once they actually came to the public market. So these were just some of the big names to look at. And I kind of put them here because I wanted to just kind of give you a list that maybe you can go back to in the PDF. And, next year at different points in time, if there is a deeper pullback, could be interesting to go back and just look at a list like this, because a lot of these names, they might be at deeper discounts. This one was, trying to remember what all these companies even were. But as I went through and I researched them, a few that really stood out to me that seemed potentially interesting. When you look at a company like this company, AppLovin, this company has an interesting sort of position. This is one that I'm kind of keeping my eye on. Global Foundries, a semiconductor company. And then the other one that I think got a lot of attention was Roblox. So these are just some of the ones that, maybe to a certain extent separate the wheat from the chaff over time. I did some other articles on Market Insights. If you want to see some of those, I went through and I highlighted some of the other names that had come up over time. if you actually go to Market Insights and you go to Events, IPOs, you can see the profiles that I did on a lot of these companies. I did this profile on Rivian, and then some other names that stood out to me that I thought were interesting that I did want to just briefly mention was this company OLPX. It's like a luxury hair company, but their growth is dramatic if you actually look at the revenue growth. And the other one, ONON, this is a Swiss shoe company. It's kind of like a new kind of athletic shoe company. But both of these companies have very strong growth, and they had some interesting quarterly reports. So I wanted to just kind of mention those as some of the names that, the fundamentals might actually be a little bit more established in some of these. Okay, so what we want to do now is we want to look at Scanner. Let me just go back to, wait a second. All right, so now on the TradeStation platform, we're going to use this tool on Scanner. And what Scanner is if you are on your platform, I already have it here. Now, the thing about Scanner is you're not going to see what I have, because when you get your workspace, it doesn't share Scanner across. So if you were to open Scanner, you would not see the same scans I have. These are the results. I ran this scan today, and I actually put them into the radar screen here for you to look at them. I'm going to show you how I actually build this. So I'm going to go to create a scan. And now this is step-by-step in slide 8 on the PowerPoint. So let's just say, I put these exclamation points because it pushes it to the top of the list. Let's say find IPOs, Jan 6, 2022. All right. Now, what I'm going to do is I'm first going to go to all stocks. And then the next thing I'm going to do is I'm going to remove these. And then I'm going to start from scratch. I'm going to go to the first thing is capitalization. So, a lot of companies, there are some symbols that don't have any capitalization at all. Maybe it's some kind of index or something. So just one way right off the bat to kind of screen out a lot of things that might be kind of noise is to set the capitalization at greater than 1,000. That's going to find companies with $1 billion. Now, the next thing is that we basically have the IPO tool. Now, this is a custom indicator I created. I'm going to show it to you in a minute once it's running. But if you've imported the ELD, you're going to go down here to indicator, and then you're going to go to IPO tool. And you're going to notice that it has this thing called days of history. Now we're going to set this to less than 500. And then we're going to do another little hack that I've learned that I've kind of created for Scanner, which is to set the sector to basically a non-null result. What this is going to do is this is going to now allow us to see right off the bat what all these companies are, because we can get a bunch of companies we've never heard of. Is it a tech stock? Is it a healthcare? Whatever. We want to know that. So what you do is you set this to does not equal quote, quote. And by doing this, this is going to give us a lot of information right off the bat. So go ahead and hit run. So this is going to find stocks with limited price histories and display their industries, allowing an easy review. You can schedule the scan to run weekly. So now I'm going to go and actually show you, while this is running, I wanted to share some of this actually easy language code with you. Now, Scanner is a tool that can look at the entire universe of stocks that exist, all the symbols on the database. This is Radar Screen. Radar Screen can do more stuff, but it cannot discover stocks. So what you want to often do is combine Scanner to get your list and then Radar Screen to learn more about it. So what I want to very quickly show you is this IPO tool. These are some of my custom indicators. So I'm going to go to this. I'm going to right click on it. I'm going to go to Studies, Edit Easy Language. I'm going to just very briefly explain to you how this works. You can do all this yourself. This is the code editor. And what this does is, it's important to realize one thing about this if you want to adjust the tool over time. What this essentially does is it forces radar screen to load the company's price history. That's what this first line is. It's called value one. All it does is it says, this is just a throwaway dummy variable, and it will simply say, give me yesterday's closing price. And by doing that, it's going to force radar screen to load the entire history. If you don't have this line in there, it's only going to load today's quote. It's not going to load the price history of like a week ago or whatever. And then what it's going to do is it's simply going to count from the beginning of the data set to the end of the data set. And if it's only been a public company for say 100 days, it's only going to have 100 as the value. So what this does is this basically gets this thing called current bar, which is the count of how many bars from the beginning of the data set on the left, like, you know, the beginning date, one day at a time, going to the right, and it's going to count, and then it's going to plot that out as days of history. You'll notice it's called days of history right here in my criteria. You'll notice it has days of history. It has two outputs, but I just want you to understand that. You're going to notice it's called plot one and plot two. So it has output one and output two. And then the other potential thing you can look for is the percent from the low. And that's a different value that I'm not using in Scanner. However, it does render and present over here in radar screen right here. So what this does is this shows how far is the stock off of its low. The data doesn't give us the IPO price because that's never actually historical data. If a company goes public for $20 and they jump to $25 on their first day, we have the candle from the first day as the open, high, low, close. We don't have the original price. So this is not going to tell you necessarily, it's not going to tell you how much it's up or down from the IPO, but it does give you a sense if it is, if it's basically pushed up or down, if it's near its high or near its low. So that's just a kind of percentage here that I wanted to just explain to you how it works. All right, now we have our results here in Scanner. So you'll notice that you can sort on these different lines. And this is when it gets interesting, because the thing here about Scanner is by giving it this throwaway value, you can actually see what all these companies are. So we can look by market cap, and not surprisingly, Airbnb is at the top of the list. Snowflake, all these companies, that we know. And so in many ways, what's interesting about this is that this is something now that you can basically copy this list in, and then over in radar screen, you can watch these and see, when they do different things. And in a minute, I'm going to show you how to set alerts on them and stuff as well. The last thing I did want to mention, though, is that when you actually go to the easy language of this tool and you go to properties, you're going to notice it has a value here of additional bars to load. I set this to 600. So the thing is I could put a stock in here like Apple, okay, which has existed for years. And if I put an Apple, you're going to see that it loads 600 or 601. So the thing is that if you're looking for a company that went public 700 or 800 bars ago, which would be about 4 years ago, you're going to have to adjust that value when you actually run, when you run the scan. You're going to go here and you're going to actually see this 600, you can change that to a different value. So there's a lot of things you can do with this. For example, you could say, I want to find companies that went public 100 bars ago to 400 bars ago, and this tool could work that way. You would simply add a second layer or a second criteria. So we go to indicator. I'm going to go to IPO Tool. We're going to set our days of history to say greater than 100. And that's going to find companies that went public 100 candles ago. Now, there's about 250 trading sessions per year. So that's just something to think about. Now, why do we want to think about it like this? Well, in my perspective, in my experience looking out over time at the history of a lot of IPOs, and this covers stocks like Facebook, but if you look at some of these companies that had some real massive rallies, back in 2020, some of them had gone public about 400 candles before they took off. So I'm going to change this chart to a weekly chart. And we're going to look at a stock now like Zscaler. Zscaler is a cybersecurity stock. You can see it went public here back in March of 2018, and it basically consolidated for about 2 years, and then it took off. So what I think is interesting, and from my perspective, when we look out now, a lot of these companies went public, and a lot of them are going to just disappear into the background. They're going to just die and go away. If you were back in 2018 and someone said, what IPO do you think is going to be up 1,000% in 5 years? Most people would have said WeWork or something ridiculous like that. But it was these companies like Zscaler, Datadog, for example. I remember when that one went public. Some of these companies had these dramatic rallies. Neo, for example, went public not terribly long before it started. Well, actually, no, this was public for 1.5 years before it started rallying. So my point is with all this is these companies that have gone public in 2021, a lot of them are going to sit, a lot of them are going to die, they're going to go away, they're going to just disappear. But some of them, and we have no idea which, are going to get added to indexes. They're going to start getting more analyst coverage. They're going to start proving themselves. And some of them could start breaking out and start rallying. We have no idea which. And the time for that to happen is going to be over the course of this calendar year. So using these methods, we can stay on top of them and then start to watch them. And that's kind of my point of this, of why I'm doing this in this webinar, because we have all these companies coming out and it's hard to judge them. But these are some techniques for you to stay on top of them. Okay. Now, what's cool about this is, in many ways, is that by being able to look at the sector level, energy, for example, has been rallying recently. If you actually look down the list, we actually have some energy stocks that recently went public. Now I'm going to change this candle to, I'm going to change this to 60-minute, because a lot of these companies, for example, if they've only been public for, a relatively short time, you're not even going to see a lot on the daily chart. Anyway, so some of these are companies, a lot of these are companies that went bankrupt and now they're back. And, now if you believe that energy is going to rally, this could be an area where some of these companies, Whiting Petroleum, this used to be a pretty important company. Gulfport, Chesapeake, these were big companies. And a lot of them, they're not in the S&P yet because they went bankrupt and now they're back. But what happens if we have, a nice bull market in energy? Some of these names, people, they come back to them, people rotate back into them, they get re-added to portfolios. And that's kind of some of the things that, I think are interesting to be kind of focusing on at this point in time. I don't want to be making any predictions of anything, but the thing is that very often by saying, what, say we are in a bad time for tech, say the Fed being hawkish is bad for growth stocks. Well, here's a whole bunch of other companies that you can easily find that have not been added to indexes yet, that are going to be picking up analyst coverage, that are going to start getting attention. And this is a way to kind of stay on top and to be watching them. All right. Now I want to show you some more things we can do with Scanner. Going on now to slide 9. All right. So the interesting thing about Scanner is it has a great deal of information in it. So these are some of the other things that we can do with it that I wanted to show you. You're asking, can you go over the columns in radar screen? And I will do that in a minute. I'm going to finish up with Scanner, and then I'm going to show you some of the stuff with radar screen. Okay. So if you want to see, like, this gave us a simple list of just things like sector and things like that. Say we want to see more information. We want to know things about earnings and revenue growth and some other indicators. Well, here's some of the things we can do. One of them is that we go to profitability and we go to revenues. Say we want to find companies that we want to sort them by revenue growth. For example, you go to revenue, percentage change, TTM. And if you set it to greater than 0, this is now going to return basically all values. And again, that means you can sort on it. We're not screening out, but we're basically bringing the data in where it's going to be visible in the Scanner results. Another thing we can do is we can say, I only want to see companies that that have a certain amount of revenue, because maybe there's some biotech company that, it's speculative. It hasn't, we don't know if it's going to get approved, a huge number of IPOs, or biotech companies that don't even have a product to market yet. Say we don't want to see those. Say we're value investors because that's what we believe the market is doing. If you go to revenues and you go to revenue, now that was revenue percent. Now we go to revenues TTM, which means trailing 12 months. I encourage you to use trailing 12 month, because some of these other values that will come up will look at calendar years. So like, for example, if you went to one of these things down here, Y over Y, we are still, from a reporting perspective, looking at the third quarter, right? So it could be looking, these numbers haven't come out yet for the fourth quarter. The annual numbers haven't come out yet. So if we were looking at Y over Y, it would probably be giving us companies of 2021 to 2020, because we haven't even finished. 2020 to 2019, because we haven't even finished 2021 yet from a reporting perspective. Do TTM, it will always give you the trailing 4 quarters. I just wanted to emphasize that, because I've gotten strange results by not doing that. All right, so we go greater than 100. It's going to bring up companies with at least, $100 million of revenue. Now, there are some other things that are interesting here. If we go to price, what price will now do is this bucket for price. This can find companies that are near the top of their ranges in terms of their 52-week high and low range. It's expressed as a percentage from 0 to 100. So if we set this to greater than 50, this is going to show us companies that trade. Let me just run this one now. It's going to show us companies that are not at like pressing the lows. A lot of these companies like DD and stuff that have done badly, these companies are just at their lows. This indicator will look at the entire distance from top to bottom, and then what we'll do is it'll express that from basically a 0 to a 100%. And so a company like this would probably be at 2%. But if you look at ones greater than 50, it's going to be looking for companies more like Chesapeake that are above the midpoint of their 52-week range. So that allows us to instantly get rid of any companies. Now look at how much smaller our list got. And now look what we have. Very little technology. What do we have? We have energy. We have capital goods. We have basic materials. So this is an interesting thing right off the bat that has screened out instantly companies that are going to be under the 50-day moving average that have been trending lower. Some other things you might want to look at occasionally is this thing called volume breakout. I don't know if it's going to give us very much right now, but if you go to volume, there's this thing called vol breakout percent. And for this one, you simply set it as a true or false. I think you just said it, if I remember correctly, if you just said it is like greater than 0, this is going to find companies that have, I'm trying to remember how exactly this thing works. This is going to show companies that have recent spikes in volume. Now, what's interesting is this is inside of Scanner, and there's another indicator available in Radar Screen that has the same name. It does something similar, but it behaves differently. So this is going to find companies that recently had some kind of volume spike. And there's a good chance it's not going to find many right now. But I wanted to show you there's a lot of these other tools that are available now. The one other thing I'm going to show you in a second when this is done. I have another indicator that I've created and I love sharing because it's something that I'm really proud of having created. It's my moving average cross indicator, and it basically tells you how many days since moving average is crossed. So it actually does, some of these companies did actually have some kind of volume spikes. If we go to this chart, we go to indicators, we go to add study, go to volume. We can actually see, let's see what we actually see. See, a lot of these recently had some kind of volume spike in recent bars. I wanted to just point this out because you might find that there's a company that was just doing nothing, and suddenly it starts getting active. An example of that, for example, was something like Roblox, when it had a big volume spike right here. It was just doing nothing, and then it had a volume spike, and it had a, it continued to the upside. So this indicator, or this tool would have discovered a name like that. Okay. So now let's go back to Radar Screen. All right, actually, let me add this other one. I'm going to add this one. I'm going to let it run, and then we're going to go back to radar screen. I'm going to take this one away because this makes my list too small. Okay. Now this is a special indicator. Here we go. MA cross days since. And what this is going to do, actually, this will show us, it takes two moving averages. It takes, in this case, the 8-day exponential and the 21-day exponential. And then what it basically does is it tells you how many days since the 8-day rose above the 21 or fell below. It's going to give you a positive or a negative number. So you can now set this to greater than, say, 1, and then you can actually put it in again, and then you can say less than, say, 30. And this is going to find companies now. It's called MAX, MA space X, days since. And we're going to set that now to less than 30. This is going to tell us companies that recently had the moving average cross in the last 30 candles. And now you can change this. If it was a bearish cross, it would be a negative number. So it's a very simple, intuitive thing to work. This is one of my favorites. So it's going to be greater than 1, less than 30. So that means that it's a positive cross to the upside, but it's happened in the last 30 candles. And you also always want to check to make sure you're looking at the right things. And we are. You could set this to the 50-day simple and the 200-day simple and look for golden crosses and death crosses and things like that. Just make sure you spell the word exponential and simple correctly. I'm going to run this. All right, it's running. Now let's go to radar screen. So radar screen had the result of this initial scan that I shared in slide number 8. Let's just look at some of these columns. Some of these are provided from TradeStation and some of the ones that I created. Net percentage change is just today's change. Here's that Trump social media stock. They must have had some kind of news today. And this just kind of shows, 1-day performance. Now, 5-day is one that I created. And I like this because one thing you always want to do is you want to go to your time frame and make sure it's set to daily, right? So I could change it to weekly, and then, some of these indicators would change, how they work. But the thing about this is 5-day and 21 days. This is roughly the trailing week. And then this is the 21, basically the trailing month. And this just allows you to see, who's up a lot, who's down a lot. Very often what I like to do when I'm looking for short-term trades, I look for things that are up a lot, maybe in the last month, and have pulled back more recently. Sometimes a stock like this would be an example of that. I don't know what this is, ARHS. You see rally up and a pullback. This is a classic, simple way to find potential bullish flags. When the month is positive and the week is negative, the trailing month, that just means it's up, and then the shorter term is down. Now, I don't know what this company is, but what is it? It's a consumer cyclical. It's furniture and fixtures, so it's not technology. That's interesting. So by including industry and sector in radar screen, again, we're instantly finding a ton of information about the stock. These are also included in TradeStation as simple indicators. This is the same indicator that we were using here in the right here where it says sector. It's the exact same thing. Okay. Here's the IPO tool. This is the same custom tool that we used in the scanner. And then there's another custom one that I've created. Now, this is an indicator that runs in radar screen. It is similar to, but not the same as, this bucket in scanner. When you go to revenue, TTM, these numbers, they're the same values, but these are not indicators. These are existing values that are in scanner. They're built into scanner, and it's not an indicator, just so you realize the difference. These items are not available in radar screen. So looks like that scan returned no results. We can go back to it and look at some of it later. Now, what this will show us is, this will show us companies, in terms of their revenue growth. But what's also good about that is, you always have to be careful when a company is up, it has like revenue growing, 100%, because, it might have like $10 million of revenue. you often see this with biotechs. It has $5 million of revenue one year because it got some kind of royalty payment or milestone payment, and it distorts the revenue and it's not real. So you always want to look at revenue growth in the context of revenue, the actual revenue, which is the TTM. These two things, in my view, should always be together, because otherwise you're going to get a lot of just garbage data. You want to make sure that you're kind of screening out companies, or at least sanity checking what you get, with making sure that companies have, a reasonable amount of revenue. So that's why I put these two things together. You can see right off the bat revenue growth and the amount of revenue. That's the same reason why I showed this in that last slide. The volume today is just useful because, it allows you to just see, how serious of a company is this. I mean, this thing traded what? 200 shares, 1,500 shares. I mean, these are obviously going to be companies that are very illiquid. Let's look at the hourly of this. It's probably going to be just a few spots. See, so these are things that kind of show you this is tricky. Now, of course, something you can easily do, I don't want to see these. This is too obscure. You just sort by the column, right? I'm going to just go over here and I'm going to just hold down shift, right? Shift, arrow up, just like you would do anything in Windows or in Word. Delete, goodbye. And now I've gotten rid of the confusing ones. Market cap is always going to be expressed in millions. So 81,000 is 81 billion. And then these are industry and sector. All right, so before we go on, let me see if I have any other questions. I don't think I do. Let me just go through. This webinar will be posted on YouTube in a few days. Why doesn't TS let us look back enough candles? I don't understand that question. What I would say with radar screen is that it doesn't automatically load infinite price history because it would just be slow. So it tries to be efficient, and a lot of analysis. If you look at how much the net change, it doesn't need to know what the company's value a week ago was to render this value. If you know anything about the way market data is structured, it's structured on a quote level, which is today's open, high, low, close, volume, last price, percentage change. That's just a quote that constantly changes throughout the day. And then you have historical data of the open, high, low, close of each candle going back. And they're handled separately in terms of the actual way the data is organized. And so you want to force it to load that historical data. Normally it doesn't, because it's inefficient to do it unless it has to. I believe the last time we had such a surge in IPOs was in 99, 2000, and we had a deep correction when investors sold them. Yeah, I mean, that's interesting. And, when you look at these, what I find interesting looking in as someone who's just kind of, worked as a journalist and analyst now for like 20 years, and I've seen most different kinds of companies go up, was that I think there was a great deal of hype around companies like Uber, Airbnb. And then the real thing and the real shame of when you watch mainstream financial news is that you didn't hear about Datadog. You didn't hear about Zscaler and Mongo database. No one told you about those companies, and those are the real companies that really had the outperformance. And so I think it's important to be data focused and to look at where the actual price action is. And that's what we're trying to actually do here, because a lot of these companies that maybe do well or maybe don't do well, no one talks about them for whatever reason, but they don't get the publicity, and these tools will allow us to see them. And the great thing about this is that you can see right off the bat, if you had looked at a company like a Mongo database or something, which, had a very significant run. I'm trying to actually think, go back on like a daily chart or weekly of this. I mean, this is another one that had just a significant run. This company was putting up 80, 90% revenue growth for like quarter after quarter, as it was on the way up. There was, using these techniques I'm showing you, if you look at its history, this company, its value here, if we go, this is, 2018, right around here, its days of history would have been about the number 300. And you would have seen revenue growth of like 50, 60%. And, that's when it was $150 and went to 550. So this technique I'm showing you is designed to basically capitalize on historical trends that I have seen. Because this is what I just do. I'm always using the tools. I'm looking for things happening in the market, for doing market insights and other things. All right. This did not give me any results. I don't want to mess around with it too much because it was just kind of a bonus thing I wanted to throw in. But just very quickly, I'm going to just add this to radar screen, which you can do. I'm going to go to studies, add studies, MA cross, MAX days since. Just add it here at the bottom. It's going to populate this. And you're going to see now, I don't have the 8-day and the 21-day exponential. But if you look at a stock like this, and I don't want to get into this too much, but basically CRC, that's California Resources, right? This company, if you're on the daily chart, this is a company now where the short term, the 8-day exponential, it's not on the chart, but this is a signal of the shorter term momentum turning more positive. You would have seen that this cross appeared in this period of time. So this is just an interesting tool. And in other webinars, I have actually showed ways that you can find the companies that are sitting at the moving averages and a lot more advanced stuff with this. I did want to just share this with you because this gives you the opportunity to find those companies kind of as they come to life using it in Scanner. But let's go on now and show you how to track them with advanced alerting on radar screen. So I'm going to add a new page. That's annoying. I have to, it's too small. Let me go to settings. Forgot about that page. I'm going to just set this grid values to 12, headings to 12. You guys can see them. I'm going to copy just click on the column, Control C, and now paste Control V. All right, you're going to notice right off the bat, interval is 5 minutes. So I do Control A, and then I go to study. I go to time frame daily. You always want to do that. Sometimes you're saying, why on earth is this indicator not working? Then you realize you're looking at 5-minute candles. That's especially true for some of the indicators we're going to look at right now. So I'm now going to, we're now going to go to slide 10. This one. So make sure your interval is set to daily. All right. I'm going to remove most of these. Just remove all of them, aside from last. Now, I'm going to add, click on this little button. I'm going to add this thing, which is under, this is technically, if you look at slide 10 now, you'll see this. You go to studies and you want to change this to show me. And then you want to set, remember, volume breakout is another one. This is, again, it's similar to Scanner, but it's an actually different tool. I'm going to go back now to indicators and go to Keltner channels. And a lot of these things you can do Bollinger Bands too. I just like Keltner channels more myself, and I tend to use them more, but a lot of this functionality exists for Bollinger Bands as well. MACD, which I like as well. If you go to, you'll notice there's Bollinger Bands here. If you want to do that, I'm not going to use them now. All right. So what is interesting here, we added volume so we can see this. Let's actually see what this gives us for volume breakout. These are actually stocks that add high volume. And so I'm trying to remember how exactly this works. When you see this 250, what I think this means is that the volume today is 250% above the average based on a certain history. So you can now go to this studies, you edit it, you can see it takes an average length and then an actual, what level do you need to have? So what it's going to do is, or what percentage does it need to exceed? So this is going to look at the previous 50 candles, and then it's going to say my threshold is 50%, which means that if the volume is at least 50% above the average over the previous 50 candles, it will then plot a value. And the value that it plots will be the percentage change above, or the percentage in excess of the actual amount. So anyway, this will simply show you anything that has a value right off the bat is going to have some kind of above average volume, which is useful just to kind of see. So if we want to set alerts, we go to last let's just find one here that, maybe is, Snowflake. All right. Say I think Snowflake's going to pull back more. Say I think it's going to go to like 280 or something. This is the simplest one. This is just for demonstrational purposes only. Go to last. Say I want to know, I want to be informed if it goes under 280, but if it also goes back above, 310. Just do that. I do it. Alerts, enable alert. And what this is going to do is this is going to start blinking on my screen. I like to set it to alert continuously. But you can also set to alert once, and it will then do is it will then put a message in your message center. It'll show a pop-up and it will leave a message in your message center. So last is the indicator you use for setting simple price alert. If we go to volume, this one also has the ability to set an alert when it has a value. So right now the market's closed, so this doesn't change. But at a certain point in time, one of these companies that had a value like Monday.com, at a certain point in time, its volume crossed above a certain threshold and this suddenly populated. So if you set this, it will alert you when suddenly the volume breakout occurs. So you want to have this set up going into the day, and then boom, it happens, and then you get alerted. If you just go here, you can also go to this and say alert, enable alert. If I just set this up, for example, it's going to suddenly bring this up for me. It came up on the screen, but it looks like this. And it says volume breakout for this stock. So that's how that works. All right. Now, some of the other ones that are interesting, Keltner channel and MACD in particular, you can go into these and you can set alerts when it touches the lower band and the upper band. So I'm going to just very quickly create apps chart analysis. I'm going to add another chart here really quickly so you can see this. I'm going to go to time frame daily. I'm going to add studies. I'm going to add Keltner channels. And I'm going to add MACD. I'm just going to go ahead and accept them in their form to move quickly. So a stock like this, yesterday it would have triggered an alert when it crossed under the bottom of the Keltner channel. So we go to Keltner channels and we say set alert, enable alert. Let's just go to enable alert once per bar. I brought this up. Price crossing under the lower level for GOCO. So there you go. It crossed under the bottom of the Keltner channel. So this is also just kind of interesting to watch. This is a volatility-based tool that basically will allow us to just see what is a company's range based on its historic range, and is it the bottom of the range, top of its range. Some people will trade when it hits the bottom of the Keltner channel and trade the bounce. It can be an interesting strategy and an interesting indicator. And the cool thing about it is with TradeStation, you can set alerts on it. Then when you go to MACD, you can also set alerts in MACD. And what that's going to do is that's going to show us when the MACD turns from bullish to bearish. So we go to enable alert once, brings up a whole bunch. The MACD differential cross under 0 for Wish, which is another tech stock. And so we zoom in on this, what are we going to see? It's this histogram. When this line, this is the fast moving line, when it crosses under the slow moving line, it basically plots that difference in the histogram. And this is going to tell us when the histogram goes from bullish to bearish or bearish to bullish. All right. So the way, when you take a step back and think about this, the thing that, I'm going to be looking to do, when I come up with stories and other things, is I'm going to keep this scan going every week or so. I'm going to take it, I'm going to look at it. And I'm going to put the stocks in here and I'm just going to watch them. And some of them over time will simply disappear. Now, the other nice thing about this scan is that it handles SPACs well. Because a company has a SPAC, and then after the SPAC, the ticker changes, and that can be really annoying, honestly, because you keep a list of things, and then one day it has a different ticker. And if you're looking at like 20 companies, it can be pretty frustrating to keep track of the ticker changes. The nice thing about using this tool and scanner is that it will essentially adjust for all that. So if you just run this scan like once a week, it will actually, if a company's ticker changes, it will it'll see that happening, and it will treat the old data, the old ticker as the new ticker. So if you just run this like once a week or so, it's going to always allow you to kind of find these companies, and it's also going to get rid of the ones that go away. I personally would not be using Radar Screen a ton right now, with a lot of these. I think that, from my perspective, I'd be looking to simply use Scanner, look at it, and basically be doing things like I did here. Let me just take these away and just say like, all right, what are the IPOs that are, not tech stocks? There are a handful of energies. There are a handful of consumer products and industrials and financials. And some of those in a value environment that we may be entering, those could be the names that gets, slowly noticed. And that's kind of like my perspective on this. I think we want to just kind of look at it like once a week. Run the scan again. New names are going to pop up. SPAC names are going to suddenly become their normal ticker. All that stuff will be taken care of with Scanner. And it's something that will just allow you to stay on top of this. We had so many companies coming public. A lot of them are going to struggle, but some of them are going to succeed. Some of them are going to get added to indexes. They're going to start having good earnings. They're going to start getting analyst upgrades. They're going to start getting noticed and becoming big. And if we run this from time to time, we're going to see them as it happens. And the last thing I'll just remind is that one of the ways to do that is this this indicator built into Scanner, which is the actually I need to add it again. This one. And you know what? Let me go back and re-add it. Just remember this one, because this one is super useful. Price percent of 52-week high low greater than 50. Now the other thing I did want to just mention is that very often when companies are new, the fundamental data is not always available right away. So just realize that if you scan for fundamentals, if the data doesn't exist, it won't appear in Scanner. It will show up as a non-matching, ticker. So you might want to, from time to time, remove the fundamentals because that can, exclude results unfairly. And the other thing is you might want to, find, like I said, find stuff in Scanner and then go to Radar Screen, copy and paste it into Radar Screen. And that's where you can look at things like revenue growth and those other things from the indicators that I gave you. You can do some of that deeper digging and analysis in Radar Screen. All right. Let me just see if there's anything else that I did want to actually mention. This is one other thing on slide 9. When you use the historical, like these things like profitability, revenues, avoid, like, some of the values are going to give you 5-year earning growth or whatever. Just, you might want to avoid that, because if you have a company that maybe 5 years ago, here's a tricky thing, it might not have had profitable earnings, and it basically is not going to give you a real value. So this is why I also wanted to say with TTM. So just, it's very good. I mean, it's the best idea with IPOs, especially look at the TTM. And I'd also add that with coronavirus, it caused so many distortions of companies' revenues and profits and stuff, that as we move past the worst from a trailing 12-month basis, and as the aberrations of coronavirus move deeper into the past, TTM is going to be the best way to be comparing apples to apples. I mean, right now, the December quarter of 2021 goes back to the December quarter of 2020, when things were starting to become normal. And then as we go to the March quarter and the June quarter, we're going to be comparing more normalcy to normalcy. If you look at something that is a longer period, you're going to have these strange things when the revenue went down like 90%, like in the airlines, revenue went down 95%, the cruise ships. And then when they come back, it can show you strange numbers. So that was just something else I wanted to mention. Also, I'll just mention that if you go to this slide here, I have multiple articles kind of highlighting these companies on Market Insights. If you want to just kind of look at those, they're available there. All right, let's see if I have any other questions. There are some questions here about TradingView. I mean, about You Can Trade and stuff that looks like they're getting addressed. Okay, I don't think. Let me see if I'm missing anything. The one thing I'll mention is that we do have masterclass. A lot of these tools, are things that we cover in masterclass. I'm actually doing masterclass Tuesday of next week. I do it twice a month. Jesus is the main instructor in it. And a lot of these indicators and stuff are things that I've created or kind of taught in our masterclass session. So we've shared a link in the chat if you want to consider that course. It's part of the all access pass at You Can Trade. Is the ATR data available? Yes. It is an indicator. Average true range is an indicator in TradeStation. If you dig, you can find it. All right. Can you please repeat, how do you determine those companies that are IPOs, and how do you put the criteria into TS? Is it by date? Not exactly by date. So just to repeat, you want to look at the number of candles of history that it has. So this tool, this IPO tool, which is one that I gave you in the zip file, it basically shows how much history a company has. So if a company only has 100 bars of history, it means that it basically came into existence 100 bars ago. This will occasionally find companies that might have had spinoffs and a few strange things like that, but most of them are going to be IPOs and SPACs. So this is a tool we look at. We don't use dates, we use bars of history. Okay, last question. I actually really want to mention this. Next earnings date. I did this webinar multiple times in the past. It was a really cool indicator we had in TradeStation, and it was something you could put in the radar screen, and it would basically tell you when earnings are coming. And it's supposed to be relaunched in the next week or two. They had to take it offline for some maintenance. So I'll actually just show this to you. Go back to. All right, so if you want to look at a lot of these things I have on Market Insights, if you're on Market Insights and you go to Education Platform, all my webinars go here. And this webinar here, I didn't want to take it down because they are bringing it back. But basically, this webinar shows you this next earnings date. And it doesn't, like right now, it doesn't exist. In a week or two, it should be available again. So you might want to look at that. And the other thing is I am going to be doing another webinar on February 3rd about covered calls and some of the interesting thing we can do with net delta on options trading, which I think is really interesting. So that's the next thing I'm going to do on February 3rd. That's going to be on the website soon. The one last thing is with next earnings date, you might have to re-add it yourself. So if you just go to the trading app store, if you go to tradestation.com, right? And then if you go to it's under platforms and tools, and then it's a trading app store. If you go to that page right there, and then you would type in like next earnings date. I'm going to also tell you my email is drussell@tradestation.com. If you have any questions, please feel free to email me. So this webinar will be available on YouTube in about a week. Hope everyone has a great day. Don't forget, Tuesday of next week, Jerome Powell, CPI Wednesday, PPI is on Thursday. And of course, we have non-farm payrolls tomorrow. So hope everyone has a great day, and I'll talk to you soon. Thank you very much.